Hello and welcome to the Freya Savage podcast with your host, Freya Savage. This is the podcast where we dive into the attitude, the mindset, and the strategy required to live a fully self-actualized life. When I say self-actualized, I'm referring to our own potential of ideal freedom, limitless wealth, and perfect creative expression. After working as an investment analyst and financial advisor for over 10 years in a very corporate environment, I quit that life and I created my own money and business school. Very quickly, I was making over 5-figure months, working as much as I wanted, generally looked around 3 hours a day. And just by being me, by creating transformational content, just by being me. So my mission is to live a fully lived life, which I feel like I'm already doing. Of course, there is always room to go deeper and go higher. And part of that vehicle for me is to empower other women to rise up to their potential through financial education, business mentoring, and spiritual guidance. So if you enjoy this episode, go ahead and take a screenshot and share it with anyone you think might benefit. And if you share it on social media, go ahead and tag me. Okay, let's dive in. This episode of the podcast is brought to you by AussieAscension.com. Aussie Ascension delivers fine, exotic health food products from around the world right to your door. They are distributors for Lead Superfood, which I personally love. They make vegan coconut milk creamers. They have all different flavors. My favorite is the unsweetened one, which I like to have in the morning with raw cacao and a blend of adaptogen mushrooms, and I mix that up together with some almond milk or some coconut milk, and it is really, really fine. I quit coffee a few years ago now and don't even notice it when I have this. They are also suppliers of Energy Bits. Energy Bits are the highest quality chlorella and spirulina in the world, I would say. I'm biased. I love this stuff. And they're in tablet form. And then they also stock Primal Herbs, which is my favorite of adaptogen mixes. The one that I like is the memory and cognitive support that's called Neuro Shroom. You can go ahead and order directly from Aussie Ascension by going to AussieAscension.com. That's AussieAscension.com. Right now, I have my calendar open for free mini one-on-one strategy sessions. The reason why I have done this, which I have not done for at least a year, is because I'm just enjoying the conversations that I'm having so much with my audience right now. I'm having so many inspirational conversations with women. So if there's anything that you want to work on together, be that business, wealth, love, or health, and self-actualizing those areas, you're welcome to book in a session with me. It's totally free. There is no obligation at all. If it feels like a fit, I will ask permission if you want to talk about working together, but that is not the goal of the call at all. The goal is to fully support you in whatever areas of life you feel like you could use with some expanding right now. So if you'd like to go ahead and book in a call with me, we will put the link in the show notes below. This offer is not always available. I don't know when I'm going to close off this offer again, but it's open for at least the next week. So go ahead and take that opportunity if that feels right for you. Hello, hey guys. So I'm doing a little bit of a step 1, step 2, step 3, step 4 sequential video series at the moment, and we are at the second video. The one that I did last time was on what actually is money. And on this video, what I want to be talking about is what is an investment. So if you didn't watch the last video, please go ahead and do that. Not right now. Stay with me if you're here now. And in this one, I want to be speaking about what it actually means to invest. Oh, hey Matt, happy birthday. Thank you so much. Happy birthday to you, Matt, because I know it's also your birthday on the same day as mine. And I'll thank you so much. Lego minifigure house. Thank you. I feel so lucky today. So many people in my life who mean so much to me and who wish me happy birthday. Okay, so what actually is an investment? An investment is something that is there. When we're talking about financial investments, it is something that is there that protects our wealth. So in my experience of working in finance and studying finance, investing in financial investments to get rich does not work. It's kind of a very amateur way actually to manage your money. Get rich by doing your soul work. Get rich by selling your art. Get rich by following your whatever turns you on and open doors and potholes to make money from that. That's how you bring money in. That's how you get rich. You don't get rich from financial investments. Yes, you've all probably heard a few stories about a friend or a friend of a friend who invested $1,000 in Bitcoin or Dogecoin or a particular company, and then now they have $100,000 or now they're a millionaire. These are fantastical stories, and they are not the average. They are probably the 0.0001%. And to follow this strategy is a sure way for emotional and financial distress. So I have also had many friends who have followed this path. I live in Canggu in Bali. This is kind of an entrepreneurial hub, and a lot of people in their 20s, 30s, 40s who are very much into technology and investments like crypto. And I have met so many people who have lost a lot of money doing this. More people who have lost than who have gained. It's just that we don't hear about these stories. And it's very emotionally taxing as well, and it doesn't need to be. So investing in financial markets should not be stressful. If you feel stressed, if you feel like you have a lot riding on it, if you feel like you're making a bet, then this is not investing. This is gambling. This is not the way to invest. So let me explain what an investment actually is. So a financial investment is something that you will buy today or whenever the time is, and there you will get either growth from that or you will get income. So the value of that investment will either increase or you will get paid income from that. So let me give you two examples. So something that provides growth, let's say you buy a property and you live in that property. So you're not getting an income from it, but that property value increases over time. That is growth. Then let's say you buy a property and you rent that property out. You're getting income and you're getting growth for that investment. This is shares. So this is my personal favorite way to invest because it's very easy to enter. You don't need a lot of capital. Whereas if you're buying property, you need a lot of capital. When you're investing shares, you can start with quite a small amount. I've worked with clients who have done my programs before who are investing $100 a week. And this is definitely sufficient. You're able to access huge amount of diversification by using exchange traded funds and index funds. It's fairly easy to invest. It's very easy to put on autopilot when you're investing in this way. So that's personally the way that I like to do it, because even though I know finance very well, I don't want to be spending my time looking at different types of investments, and I don't want to spend my time looking at different company valuations or reading company reports. That honestly bores the absolute shit out of me, and it's just not necessary, because I also know that active investors, so they're the ones who do these kind of things, on average get lower returns than those who invest passively, which is the way that I teach and the way that I do it myself. So on average, you're likely going to get a lower return anyway, and that is even when you compare this to full-time investors who have studied at Ivy League schools, who work as fund managers, who spend the majority of their lives doing this for a job, and 70% of the time they get it wrong. I mean, these are professional investors. So you don't need to you don't need to actively invest to be a great investor and to grow your money and to secure your wealth. Secondly, I would say that if you are being an active investor, it's a very slippery slope, and you are on the losing side. The averages are already telling you you're on the losing side. So that's great news for the people who want to do things the simple way, who want to secure their wealth, who want to grow their money over time, who want to eventually have a passive income, and who want to put it on autopilot. You can do all of this using a passive, simple way and investing in fairly simple, run-of-the-mill investments. When you get excited about investing or an investment, that is a huge red flag, because it's not that exciting. What's exciting is that your money is slowly growing over time. What's exciting is that you can make money over here by opening the portholes for income, and then you know that you are securing that money, you're protecting it against inflation, because remember, if you keep your money in cash, if you keep your money just invested in cash, that money is going to be eroded by inflation. And you need to keep enough money in cash so you can support your day-to-day needs, so you can support your short and medium-term desires, like going traveling when that is possible again, buying birthday presents. It's my birthday. If you want to buy me a present, go for it. I would love that. Whatever else it might be that you have each year, to ensure you have enough cash for that. You don't want to be selling down your investments for that. So you want to have cash for those things. But cash is not an investment, right? I don't even bother looking at high interest savings accounts. The interest rates are so minuscule on that anyway. Look at accounts that don't charge you any fees. That's important. Have enough cash there to support your short-term and your medium-term goals, so you're not selling your investments. But don't worry about trying to grow your cash. Don't worry about getting a high interest rate on that. Instead, focus on this pool over here, your investments, your financial investments. And that is the assets, that is the wealth that you are protecting, and that is the wealth that's going to support you to have a passive income down the track. It's going to support any longer term desires you have. So maybe in 10 years or 15 years, you want to reduce the amount you work, or maybe you want to build a property, or maybe you want to have children, or you have children, you want to be able to send them to a great school that costs X amount every year. So these are the longer term goals, and this is what an investment portfolio is for. Thank you so much for the birthday wishes. So your investment portfolio essentially is for you to invest in for forever. So people ask me, how long do I invest for? You invest for forever. Well, then what is the point of investing if I'm never going to be able to get my money from it? Well, this is where the exciting stuff comes in. I feel excited about it. Is that when you contribute to your portfolio over time, something called compound interest kicks in, which you may have heard of before. Not much happens the first 5 years, even the first 10 years. You know, it's moving, but it's fairly slow. When you start to get to 15 years of consistent investing, this is when compound interest really starts to work magic. This is when your portfolio, the amount you've actually invested, an extra third gets added to it. And then it doubles. And then it triples based on what you've invested. And this is using a very basic, simple investment strategy. You're not taking a lot of risk here, but you have to be committed to invest for forever. So why would you invest for forever? What is the point of investing if you're not going to be able to access it? What is the point of keeping your money away? Isn't the point of having money to enjoy it? Yes, it is. So this is also why you don't want to be investing everything, right? You want to have enough so you can enjoy your life now. It's not about making any sacrifice. It's about living right now the way that we want to live while setting ourselves up for the future as well. So then our future self can thank us when we no longer want to work anymore, or when we want to up level our living arrangements, or when we want to go on that epic holiday, or when we want to have children, whatever. We can thank ourselves down the track. And this investment portfolio does start paying you income. So when you invest in the share market, you are investing in companies, in businesses. So this is where it's different from investing in something like cryptocurrency, right? You're actually investing in a business. This business has assets. It sells something. It sells a service or it sells a product. It has money coming in. It employs people. They probably have an office, probably have a few offices if they're a public company. They have a balance sheet. They have assets. They have liabilities. They have income. That is what we want, because then we become an owner of that business when we buy a share in it. And guess what? As an owner of a share, you get paid the profit from that company because you own the company. So that is what we call dividends. And so you start to get income from investing in shares. And this is what we want. We don't want to be making money from buying and selling. This is, of course, it is one way to do it, but honestly, it's very risky, and most people lose doing this. It's also time consuming. It's also costly because of the transaction costs of buying and selling. It also means that you're an active investor. An active investor is what it means, active. You can't keep your eye off the ball. You have to be constantly looking at your investment portfolio, looking at everything else that's going on outside of the world, in the world. And it really is a full-time job. And you don't need to do it that way, because like I said, people who are active investors have lower average returns than people who are passive investors. So it doesn't even work that well anyway. But people get this ego thing about it, it's kind of like, when somebody is an average investor and they're starting out in investing, and maybe they've been investing for a few years, they start to learn a little bit more, and then they think, I can do it all myself. I can beat the market. It really is this ego thing. But then when you get to investors who are expert level, who are professional investors, who have studied finance, who worked in finance for a long time, Warren Buffett, right? He even has a fund. He's a fund manager that is an active fund manager. Yet, what he says is that invest passively. You'll do better. That's how he is investing his inheritance to pass on. He says we're going to put that in passive investments. Don't actively invest. And Warren Buffett is the investment guru. And even he says this. So it's kind of like really anything. When you get to mastery level, you go back to the simplicity of things and the basics. And this is so true for investing. So don't get carried away and think, okay, now maybe you're somebody who has a lot of capital, whatever that means for you. Maybe you have a few $100,000, maybe you have a few million, and you think, okay, well, I need to do something more complex with this now because I have a huge amount of assets. I need to treat things differently. No, don't get caught in that trap. simplicity is key. It doesn't matter how much money you have. Simplicity is the key. The strategy stays the same. So I still haven't got to the point about the building an investment portfolio. So when compound interest starts to kick in, 15, 20 years, sounds like a long time, but it's really not that long away. It will come quickly. Then you have a big pool of assets, companies. Each one of those shares is going to be paying you income because you're an owner in the company, remember, and the company pays profit because the company has things that they're buying and selling, things that they're selling, and then you get part of that money. So that's going to be start to be deposited into your bank account. You can either decide that you reinvest it, which is what I do at the moment because I'm still in accumulation phase. I don't need that income right now, and I want it to grow. That's how compound interest works. You keep reinvesting the interest that you get. So interest, and when I say the word interest, I'm using that interchangeably with the word dividend, with the word income, same thing. So now you have this big pool of assets. Maybe we've built up $1 million by now, let's say 20 years down the track. And now I think, okay, I'm 20 years, I'm 50, 53. Yeah, maybe I want to take some time off. And then I can start, instead of reinvesting that income, I can decide, no, I'm going to take it. And it depends on where we are, what's happening with interest rates. It depends on how much income we can generally get from those companies, whether it's more growth focused or more income focused. But let's say we can target around 5%, 4 or 5%. So that means I'm now getting $40,000 or $50,000 a year for nothing, only because I consistently invested. And by the way, $50 or $100 a week builds in a $1 million portfolio. But you need to start now. Time is what is the most important thing here. Time and consistency. It doesn't matter what's happening in the market, you continue to invest. Always. It doesn't matter who's in power. It doesn't matter how many lockdowns there are. It doesn't matter how many different strains of COVID come out. It doesn't matter if aliens take over the world. You keep investing. You set it up as a direct debit. You don't touch it. You don't pull the money out. You just set it in the background. And when you do that, that's when you build $1 million portfolio from seemingly not much. Most people who are watching this are able to invest $50 a week. And if you can't, then open up this other porthole with income. Open up more doors for you to earn more income. Because if you are not investing, you will always be chasing your tail. You will always need to work for money or be relying on somebody else. And that keeps you in a jail cell. We're already in a jail cell living in this physical world. We're already here. We already have enough shit going on. Make life a little easier for yourself and give yourself a big exhale by knowing that you have your investments sorted. You know that in the future you're sorted. It's going to be okay. You don't need to rely on anyone else for money. You don't need to worry about money. My partner said something to me yesterday about money, and he said, that I believe that money is freedom. I said, no, don't get that wrong. Money is not freedom. Money, particularly this type, when you're investing, having these pools of investments, so wealth and investment portfolios, that can be a foundation to allow us more freedom. Because what it means is most people, not everybody, but most people are distracted by security. They feel like they don't have enough. I just need to have a little bit more money. I just need to keep that income coming in from my employer. I just need more of this, more of that, so I can feel safe, so I can feel secure. And what that is it's a distraction from us living expansively and vast and living with this vastness within ourselves and allowing our soul to express itself. So when we're able to have finance and money sorted and secure, we're no longer distracted by it. Of course, it's important to do, this is where it's important to do the money mindset stuff as well, because there are plenty of people who have a lot of wealth who are still distracted by this. So the numbers actually don't mean anything, right? But for sure, having a basic amount, where your needs are covered, this has a huge impact on our ability to feel spacious and to feel free, and then to be able to explore ourselves more deeply and explore life more deeply. So yes, finances and money are one foundation that allows us to self-actualize. We need to have that safety area sorted. And that comes with the functional and practical elements, which includes having enough money in your bank account, knowing how to manage your money in terms of cash flow, having money set aside so you're not like, oh, my car registration's due, or oh, I've got to pay insurance. Oh, what a surprise. Even though it happens the same day every year. It's the same day every year. So you're not, so you are clear. So you know what's happening. You know what's going on. You have that sorted out. And that you have the future you sorted as well. You have your investments ticking in the background. Because what happens is, when I worked in financial advice, people would come to me when it was urgent. They would come to me when they were getting divorced, they were having a child, they wanted to start a business and leave their job, or somebody had died and they had an inheritance. All these, I can help you, but it's kind of a little late. And if you actually sort yourself out earlier on, then you can do a lot more with it. So if you start investing today, before you need that money, even if you're thinking, oh my God, I have no idea what I'm going to be doing in 10, 20, 30 years, good. This is a great time to start. Start before you need to start, because you actually need to start now. But start before it's urgent, because when it's urgent, you don't have any runway. You can't use the power of compound interest. Then this is when you have to take excess risk. And this is when people are grasping at these get-rich-quick investments like Bitcoin, that has no inherent underlying tangible value. It's not an investment, and it's not a currency. It's not an investment because it doesn't produce any income. It has no underlying tangible value in the sense that it has no assets. The only growth it can provide is based on what someone else is going to pay for it. It has no underlying inherent value, not like a business does, right? The underlying inherent value for that is it's the assets it owns, its goodwill, that's the branding of the business, its client base, its services and products, its research and development. Bitcoin doesn't have any of that. It should be a currency, but it's not even a currency, like I spoke about in the last video around what money is. It's also not a currency. But what happens is people get urgent and they think, I need to leave my job right now. I need to get rich quick. And then they go to these things. And this is when people lose a lot of money. And then they say investing doesn't work for me. But you never did investing properly. You were gambling. So the takeaways, an investment is something that produces income or produces growth, or it's both. And the don'ts for investing is, don't invest when it feels emotional or when it feels exciting. Don't invest in anything that promises you to get rich quick. And the do's, you invest for forever. Invest passively. Invest in good quality companies or index funds. Put it on automation so it happens. I invest every week or every fortnight. I don't even know. I can't even remember. I think it's every fortnight I invest. And it's just set on a direct debit. And I invest no matter what. And what that means is I'm de-risking, because it doesn't matter if the market is up or if the market is down, because I'm going to get a consistent average because I'm constantly investing, right? So it doesn't matter if I'm investing when it's expensive, because I'm going to keep investing. And in 6 months' time, when it's cheap, I'm still going to be investing when it's cheap, and then that's going to average out. So I'm essentially de-risking my purchase price. Then the next point is you reinvest. Reinvest your income so you can get that compound interest until it's time. It's time for you to eat the fruit that you've planted, because that's what it's there for, right? And then you draw down on that income. You're still not selling your investments. Those investments are still growing, by the way. You still have capital growth. So your investments are still going to be growing, and you're going to be getting an income, a salary essentially, for doing nothing, just for making this smart decision right now and just putting something on direct debit. And you're going to get paid for it down the track, and you're going to be able to eat the fruit and put your feet up. Okay, that's it for this video. Hope you liked it. Drop your comments below, and I will see you for the next one. See you guys. And take a screenshot and share it with someone else who you think it might be of benefit for. If you share it on social media, I would absolutely love if you could tag me. My handle is Freya_Savage_. If you want to see what I have going on, you can subscribe to my mailing list. Go ahead and head to my website, freyasavage.com. I'm also very active on Facebook on my business page, which is also Freya Savage. I hope to see you around. Feel free to reach out to me, and I look forward to a long and prosperous relationship together.